Welcome to DWS Market Outlook. Financial markets have had a spectacular start into the year. Does this mean that we can now look forward to a stellar 2023 after a not very pleasant 2022? Looking at history books, the statistical correlation between the performance during the first trading days and the development for the rest of the year is positive, but it is not significant at all. So let's take a look at the overall environment for markets. The economy is holding up better than many analysts and economists had expected. It is good news for risky assets that the major economies will probably be able to avoid a severe recession. Mathematically, stock markets can only rise if either corporate profits rise or valuations rise. As far as corporate earnings are concerned, the forecasts for the current year are coming down. On balance, there is now negative earnings growth expected for 2023 compared to last year. If earnings are not rising, then valuations would have to take over and drive stock prices up. And indeed, rising valuations were behind the good start into the year. The valuations, in turn, were enjoying a nice tailwind from falling yields on bond markets. Just like equities, fixed income securities as well had a very good start to the year. The market seems convinced that the inflation problem has been solved. For the US, futures contracts are priced for rate cuts by the US Federal Reserve for as early as the second half of this year. In this regard, we would be a bit cautious. We do expect the rate hiking cycle to come to an end in the coming months. However, we would not expect quick rate cuts thereafter. Hence, we believe that there is a risk of disappointment with regard to central bank expectations and thus also with regard to bond yields. As a result, the tailwind for valuations might wane. Therefore, despite the good start to the year, we would not extrapolate the performance of the first trading days for the entire year. That's it for today. Thanks for watching and goodbye.